You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 14th day of August, 2019. Thanks so much for joining us, whoever you are, wherever you are. Well, we're just glad to have you right here, right now. Let me put up a chart of the S&P 500 Emini Futures. And there we go. It's dribbled off the lower right-hand side of my screen. Let me tighten this up. Now, if you can't see this chart, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that'll give you one-click access to the show each and every day. On the days you're out of the office, can't get to the desktop, just point any internet-connected browser to youtube.com/CFRN/live. There you will find a live real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. Okay, also a heads up for all the CFRN logical swing traders. We had a trigger this morning on the S&P, and I think the NQ. I'll double check during the show here, but just a heads up, swing trader, the logical swing trader, is out of beta. We're ready to roll, and I'll ask Valerie at some point during the show here to put in some basic information. The logical swing trader is available on a monthly basis, and if you want to save some money, an annual basis. She'll give you the links. You can click. She'll get you signed up, signed in, acclimated, give you the link to the private channel, the private discussion group, all of that. And let me just remind you that if you take the monthly or the annual subscription, whichever you choose, you can cancel at any time. Okay? All you have to do is notify us 5 days before your next billing period, and we'll take the necessary steps to make sure you don't get billed again if you don't want to be. Okay? She'll take care of that. I'll talk to you about a little bit of news. I mean, we got so much to cover in the markets. We've all seen, I'm sure at this point, the big down move in the indices, in crude. The sky's not falling, but to some it might seem that way. For us, we just see it as opportunity because we're futures traders. If the market's trending higher, we're all about that. If it's trending lower, love it. Often the market will fall quicker than it climbs. So whichever way the market is moving today, we want to be a part of that. And there are days when you have two-sided action, which means you might be long part of the session, you might be short part of the session. The market dictates what we're going to do. We know that under any given set of conditions, if the market does this, we're going to do that. And if it does that, well, we're going to do this. So we know ahead of time exactly what action we're going to take. We know when we're going to take it. We just have to let the market do its part first, clue us in on what it's attempting to do. And whatever the market's attempting to do today, even if it doesn't accomplish the goal, chances are it will work hard enough and move far enough that we can take out our daily goal, well, whatever that might be. Okay? All right, a little bit of news. When I come back after Michael gives us the recap of the live training room, we'll talk about the alerts from last night. We'll talk about the week. Logic 247, we're now in our second year. We're on to a great week. We feel very blessed. About 9%, I think, of alerts this week have been stopped out. So I've got a midweek recap, a midweek report for you. We'll go over those here in just a bit. But let me talk to you for a second about a new market indicator. Okay? Yeah, a new market indicator called Bitcoin. Some are saying that Bitcoin has become a geopolitical turmoil indicator. What does that mean? Well, the co-founder of market research firm DataTrek Research, Nicholas Colas, says that Bitcoin is in fact his new geopolitical turmoil indicator. In an interview with CNBC, Colas claimed that Bitcoin was one of the few assets of which the price predicted Hong Kong's protest and the consequent local capital flight. When the interviewer asked him whether he believes that Bitcoin is a safe haven asset, we talked about this the other day, the flight to quality, Colas says, we are definitely seeing that and really are perked up, and it really perked up around the Hong Kong protest and some of the currency flight that happened out of Hong Kong and the mainland. And Bitcoin was one of the few assets that we watched that actually predicted that uncertainty ahead of time. Nothing else was really moving. Bitcoin was. Is it possible in the span of just a few years we've gone from looking at each other with quizzical looks on our faces going, is this thing even real? Now suddenly, it's an indicator on a global scale. Think about that. How far we've come in such a short time. Where will the next decade take us? His remarks are in line with what had already been said by Peter Chur, Forbes contributor and a former executive director at Deutsche Bank. He recently wrote in an article that Bitcoin is a leading indicator of hidden geopolitical tension. The interviewer also said that many investors are concerned about the fact that Bitcoin used to be worth $20,000 per coin, and asked if there is any guarantee that such a price collapse won't happen again. Colas answered, stating that indeed it will happen again, since Bitcoin is still a new and very volatile asset. Bitcoin had begun trading at a premium in Hong Kong as continued political uncertainty produces a widely reported spike in demand. So there you have it, a little bit of news. All right, let me give you the numbers from around the world. We'll start here in the U.S. These are the cash markets, indexes, if you will. Let me refresh, bring in some fresh data. All right. The Dow currently down 635 points. It's 2.5%. These are big numbers. NASDAQ down 222 points. That's almost 3%. S&P 500 down 70, 2.5%. Russell 2000 down 40. That's over 2.5%. In the commodity basket, crude oil down $2.78, trading 54.32 last. Make that 54.29 last. That's a drop of almost 5%. Gold, on the other hand, go gold, up $14.70, trading 15.2880 last. That's a gain of almost 1%. At the close in the Asian markets, the Nikkei posted a gain. Remember, we talked yesterday on the show about how last night, when Asian markets opened, we should see a pretty good rally based off the same thing that sent the U.S. markets higher yesterday, and that's the fact that Trump said he was going to ease up on some of these tariffs because of Christmas. Okay, that was his words, not mine. Nikkei posted a gain of 199 points. It's almost 1%. Shanghai up 11 at the close, half of 1%. The Hang Seng posted a gain of 21 points. No big deal there. In the European markets at the close, FTSE down 103, 1.5%. DAX down $257, a little over 2%. CAC down 111, a little over 2%. Now that gives us a green day in Asia, red day in the UK, and here at home, it's definitely a big red Radio Wednesday as we head into the recap of everything that happened this morning in the live training room. When Michael finishes, I'll be back. We'll go over the Logic 247 alerts. We'll go over the Concierge Trade Alerts. We'll take a look at the week. We'll speak with John. All that and answers to your questions when I come back. Michael, take it away.
Okay, I got it. There we go. Okay, so you should be looking at...
You got it.
You are looking. Okay,
locked
good.
and loaded. It's all yours.
All right, here we go. Good afternoon, everyone. Today is Wednesday, the 14th day of August, 2019. If you have not taken a free trial with us and you want to take a free trial with us, go to the home page at CFRN.net. Right over here in the right-hand column, it says apply.cfrn.net. If you click on that, you will be brought to this page, where there's a whole bunch of new features. But you'll be brought to this page, and you can go through everything that's up there. Dwayne and I did it a little while ago. Make sure it was all working right. And you can just put in your name, your email, your phone number, and you can tell us the biggest trading challenge. So we can tailor one-on-one training for you. Hit the send button, and you'll be sent all the information that you need to get into the live training room. Okay. Results. We had a pretty good day today. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. All right. Today, as I said, is the 14th day of August, 2019. Today, we made 40 ticks in crude oil, 20 ticks in gold, and 8 ticks on the ES. And that put us up $700 a contract this morning. Today, it took 16 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract. Yeah, that's true. It was on the ES. Okay, and we took a total of 11 trade setups. On the month now, we're at $3,662. That's over 10 days, averaging $366 per day. And on the year, we're at $21,213. That's over 144 days, averaging $147 per day. Okay. Now, let's get into what we did or didn't do. On gold, we had 5 trades, looks like. Now, there was some really good movement, and we missed some really nice trades today. But let's see, we started out in here. We didn't have anything until over here. This was a momentum short trade that we missed. Then we got this one here. We picked up 8 ticks on that. Had a break even right there. We missed this beautiful trade in this one. We had a break even there. We picked up 10 ticks there to put us at plus 18. 2 ticks there to put us at plus 20. Okay, and then we get into the break, and nothing during the break. So gold was pretty good to us today. Can't complain about it. The euro. No, we didn't do anything with the euro today. Yesterday we got the goal for the day on the euro. Today on the euro, let's see. There was a shorting opportunity right in here. Now, I don't know if it was going into the low of the day or not. I don't have it highlighted, but I did draw a trend line, so that was it. And honestly, that looks like that was it on the euro. Crude oil. We had crude inventories come out today. And we started out on crude. I picked up 2 ticks on this one, then 23 ticks right here when the inventories came out, or right before the inventories. I had been long from here, and it just ran right up to there, and I locked in 23 ticks. And then we picked up another 5 ticks here. Okay, that put us at plus 30. And then another 10 ticks here to put us at plus 40 on the morning. Crude is my favorite market. And we had lower highs and higher lows, so there was nothing in here until we got up here. And then the cycle was going down too steep. This is all during the break now. Yeah, that was it. There was really nothing after the morning session. There was really nothing left there on crude. Now, I don't know. I don't know what it's going to do the rest of the day, but I know that after the morning session today, there was really nothing. Okay, and let me go back on the ES to the beginning of the day. Yeah, it looks like I had 3 ES trades. Okay, so we got in this morning. The ES was in a weekly trading zone. Dropped out of the zone. We picked up 8 ticks on this move right here. That was the goal for the day. Okay. Missed along there. Missed a short there. Now you see this is a weekly trading zone here, but it's flipped around the other way. So I can just do that, I suppose. Okay, we had a break even on this one. And there it is. I had one more break even right in there. Now during the break, nothing. A shorting opportunity right there. No, that wasn't during the break. That was before the break, but I guess I missed it right in here. All right, and there was another one right there. A follow up, and then it was changing directions in here, and it gave a long opportunity right here that took a long time, but it finally went up. All right, and then it changed directions again, but it didn't give a trade setup. Then it retraced some of it, didn't give a trade setup. Put in a new swing low, again didn't give a trade setup. And now we're getting into the current time, and it just doesn't have anything right here. Not right now. Okay, but we ended up with +8 on the ES today. So we'll go through all that again on the spreadsheet. If you're going to read the spreadsheet, you could read all the CFTC risk disclosures down at the bottom. Today is the 14th day of August, 2019. Oh, crap. Today we got +40 on crude, +20 on gold, and +8 on the ES. Put us at +700 on the morning session per contract. Today took 16 minutes in one trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 11 trades. On the month now, we're at $3,662. That's over 10 days, averaging $366 a day. And on the year, we're at $21,213. That's over 144 days, averaging $147 per day. Now that is one contract, 2 hours per day. One contract, 2 hours per day. Okay. If you have not taken a free trial with us and you want to take a free trial with us, go to the homepage at CFRN.net. Over here in the right-hand column, it says apply.cfrn.net. Click on that, and you will be brought to this page. You can go directly to this page if you want to, eminitrainingschool.com. And when you go here, if you want to talk to yeah, I know. I was just noticing you started out that way. I'm gonna start it out like 2 seconds later. Okay, we're on this page. You have everything a trader needs. And to sign up for the free trial, you go down here to where it says 1 week free trial. Click on the name, the email, and the phone number. Down here it says tell us your biggest training challenge, so we can tailor one-on-one training for you. You can put it in there if you want to, so when we do one-on-one training with you, we can discuss the problems that you have.
Yeah, whatever's important to you, because each trader has different things. Maybe a different hang-up, a different issue, or maybe it's a good thing, and we can help encourage you along that path.
Yeah, we can definitely do that. When I was talking with Greg this week, I think it was this week, the other day. He has a lot of good ideas and thoughts.
Mm-hmm.
So we can encourage you and help you as much as we can, any way we can. All right, and with that, we can pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yeah, I am. I'm just sending a text to Valerie, but I guess she's listening. So, what it says, Valerie, if I don't know if you have Garrett's number. If not,
I don't.
Okay, let me just see.
But let me go back in the history.
Real quick,
I might
have been clever enough to actually put it in my contacts. That'd be a surprise. Oh, I found it. So what I'm going to do, Valerie, is I'm going to text it to you. And if he picks up, just ask him, say, Dwayne, just want to know if you're coming on today, because today's Wednesday. And he said he was going to try to come on Wednesdays. So I'll send this to you in Telegram. Hey guys, you hear us talk about Telegram a lot. That's become our go-to de facto kind of workspace. I sort of live in there. If you ever want to find me, that's the best place. Start there first. Okay, there you go, Valerie. And let him know if he's not prepared to come on. It's not an issue. And if he is coming on, he wants to know when. Just tell him to pop in whenever he can.
Okay, great. Thanks.
Thank you so much. Okay, let me grab the charts. Recap of the recap.
Today it took 16 minutes and one trade to get to $100 per contract.
16 minutes and one trade. That's a good bingo.
That is.
So what have you done different the last couple of days?
I haven't done anything different.
What?
It's been great, though.
Did I hear you say this was the best month of the year so far?
Yeah.
Or did you say best week, best month? What did you say?
Best month. Best month. Yep.
Might be the best week too, huh?
Yeah. It probably is the best week and the best month. And we're only halfway through.
And the markets have spent a lot of that time declining. So again, that just reiterates what I said earlier, is as futures traders, it doesn't matter to us one bit at all if the market's moving higher or lower, as long as it is serious about what it's doing and makes it obvious. We're just going to hitch a ride.
That's it. We're just going to jump on and take what we can.
Okay. All right. So I've got the charts and I've got... All right, guys, what I'll do first... Well, I always go to the Concierge first. Let me just jump to the logic today. For this week. We are on week 54. Some of you might be old enough to remember a television program called Car 54. I barely remember. Okay. It's a big hit in my house because my grandfather was the sheriff. He had no policeman. He had no force. He was the force. And he really was a force to be reckoned with. Big man. All right. Last week, week 53, Logic 247, we had a total of 103 alerts issued. 19 of them never triggered. Left us with 84 actionable alerts. 15 of those alerts were stopped out. So 18% of actionable alerts stopped out. Now the Logic 247, that is the dynamic, in the moment, as it is happening, kind of an alert, based on current price behavior. The one I'll show you in a moment, the Concierge Trade Alerts, that is a static report issued once per session, usually right after the Globex open, sometime between 6 p.m. and 9 p.m. Eastern. With that, we draw a couple lines in the sand. I'll show you how to do that. And that defines our overall outlook for the session, for the entire session. Let me focus here on logic. Now, the Concierge is based on previous price behavior. Logic is based on current price behavior. And when those two come together, it usually represents a pretty powerful dynamic. And so we'll see that as we move along here. Okay, that was week 53. We're now on week 54. First alert coming out of the gate this past Sunday night. That's when we go to work, 6 p.m. Eastern Sunday night, right up through Friday afternoon, 5 p.m. Eastern. Well, the first alert, 3 weeks in a row now, S&P stopped out. And then we have the Dow, the NQ, the Russell. When you see thumbs up, reach the target, or at least the first target, if it's got a PT. Z's means it just didn't trigger, and we moved on. And we have copper, gold, silver, and gold again. Yes again, yes again, the Dow, and crude. Moving in, that was all Sunday night. Moving into Monday, it's gold. And here's an S&P that didn't trigger, an NQ that didn't trigger, another ES found its target, Dow, NQ. Now, these swings that went out earlier in the week, those are going into the swing channel. I just haven't got a chance to move them over. The Dow was stopped out prematurely. The S&P and the NQ didn't trigger. I think it's this morning. We'll look at those as well here in a bit. And the Russell, I'll have to check on it. Then we had a crude stopped out. And now we're into Tuesday. Now, this is PT. For some, it'll be an FT, full target, final target, because what happened is it hit 1510 to the tick. It didn't trade through it. So if you had an entry at 1511 and you had an exit at 1510, if you had a hard target at 1510, price traded at 1510, some trades were executed at 1510, and some were not. So when that happens, we have to call it a PT, even though some of the people in line, in fact, did get filled. So next one is crude, no trigger. Is a short on gold, a long on the S&P, long on the Dow, long on the Russell, long on the NQ. And that brings us into today, Wednesday. Short on the S&P, short on the Dow, short on the Russell, short on crude. This is the Swissy, the Swiss franc, and we haven't, we'll look at that here in a bit. And this one's the Australian dollar, okay? Remind me, and we'll go back and look at those on the chart. And that's it for the week. And so what that amounts to for the week, 26 actionable, 2 stopped out, which equals 7% of the Logic 247 alerts. 7% have been stopped out this week so far. We still have the remainder of today, Thursday, and Friday. Again, if you want to participate in the Logical Swing Trader, now out of beta, talk to Valerie, 949-42 Emini, 949-423-6464. You can take a monthly subscription for to save money. You can take an annual subscription. She'll get you all set up and squared away. Now we're going to go to the Logic 247. I'm sorry, we're going to go to the Concierge Trade Alerts. These are based on previous price behavior. What you just saw, the logic, that's on current price behavior. That's as opportunity unfolds in the markets around the clock from Sunday evening 6 p.m. Eastern to Friday afternoon 5 p.m. Eastern. We're hard at work, so you don't have to be. We work around the clock, so you don't have to. All right, here come the Concierge. These went out last night at 6:20 p.m. Eastern, right after the Globex Open. If you would like to take a screenshot, be my guest. 5, 4, 3, 2, 1. Okay. All right. Now, the alert said to consider being short 29.01. That's right here. We had a weekly trading zone at 2884/85. That is this week's zone. You know, we almost got to the lowest zone earlier in the week, and then I think we were one level away from the highest, and now we're back in the lower part, but so far we've stayed on the playing field. And that's one way of looking at the Concierge, or the weekly trading zones, I'm sorry. One way of looking at the weekly trading zones, sort of like a gridiron football field. You're sitting up in the bleachers at the 50-yard line. As you look left, 40, 30, 12, 10, end zone. And to the right, 50, 40, 30 into the end zone. Price typically stays on the playing field for the entire week. There are occasions when price will trade above the highest weekly trading zone or below the lowest weekly trading zone. When it does, most of the time, it will get back onto the playing field before the close Friday afternoon. And there are some weeks where it does not. Okay. All right. So from 29.01 down to this weekly trading zone, only three things can happen when price encounters a weekly zone. Consolidation, which is what we see here and here. Rejection, that's the second most likely. And the third and least likely is what we call the slice. And as I come across some of those, I'll point those out. This is consolidation at the zone for 1, 2, basically 2.5 hours. Okay. Now from 85 up to, so that's a 16-point move right there. 20. Hey Valerie, can you run the ad machine? That's what they called it before there was calculators.
Okay, I can.
Fun facts no one tell. 29.01 minus 28.53.
48.
That would be 48. Okay, so 48 S&P points available. That's what the market made available. Okay. We make the alert available, but the market does the heavy lifting. We have no control over that. All right. Now, has there been an exit signal yet? Let's check. There hasn't, but we'll check. I'm guessing. I haven't actually surveyed that, but here we go. All right. No. Now, what does an exit signal even look like? Well, yesterday, which was Tuesday, so this would have been from Monday night's alerts, we said to consider being long the S&P 29.05. Ran up to a weekly zone, found good resistance, came off, and you can see the rest. But right here, see how the step line makes a decisive cross across that blue and climbing CFMA1. Because it's a long trade, what we're looking for is the first red candle that closes below the step line after it crosses over. And so that's going to be this guy right here, closed at 29.30. Exit signal 29.30. Okay. All right. We don't have an exit signal as of yet. Now, when there's an extended move in any of these markets, and extended move is defined by what the typical swing in a market is. Okay? S&P, the average swing, 3 to 5 points. So once you pass 5 points in a move, a directional move, that's when you begin to ask yourself, okay, is this going to become an extended move? Because at 5 points, once you go past 5 points, that opens the door to the possibility. Because the average swing is just 3 to 5. So as you blow past 5 and then 6, the further you go, the more compelling the case that you are in fact in an extended move. And it's on the extended moves that this exit signal works beautifully. Up here, we had a weekly trading zone. We expect it to be good resistance until it isn't. We went from, hang on a second, 37, 38. Yeah, I need to add, since I've already put this week's zones up, I need to complete the picture here. 29.19. And 29.20. Okay, and then below that, 28.99. 2891. I'm sorry, 2900. There we go. Now, check out, I'm going to blow this up a little bit so you can see it closer. We were just talking about this one from yesterday. The price ran up, hit this zone. Well, first it sliced through this zone. So now I can show you what a slice looks like. This is the least likely thing to happen, but it does. When price slices through a zone like this, as if it weren't even there, what we anticipate to happen and what typically will happen, price will pull back to the zone it blew through. In this case, confirm that it is actually now, it wasn't good resistance on this move. Can you be good support? Yes. And then price continues in the direction of the slice. So that's just a beautiful example right here of the least likely thing to happen. Only three things happen when price encounters a zone. The second most likely, number one is consolidation. Number two is rejection. Price goes up, touches a zone, and then just backs off and leaves a wick in its wake. Consolidation, rejection of the slice. Okay, only three things. Now, price slices through, hits the zone, finds good resistance, retraces to the zone where it finds good support. That sends price back up to the zone where again it finds good resistance. Down we go. Price did not make it all the way to the zone. That tells us that the market is very buoyant. There's a lot of bullish sentiment in the market because you see on this candle here, there's a swing low. So now we have a higher low. Buyers come in early. They run this thing back up to the zone where we find good resistance. It comes off. Buyers come in early again. So we've got a low, a higher low, and then a higher low, which sends price back up to the zone. Now each one of these moves from 29.20 to 29.37, it's a 17-point move. 17 points up, 17 points down, 17 points up, not quite the full 17 down. We came about, the swing low on this candle was 22.75, and we were trying to show 2 3/4 points, right? Buyers come in early, send it back up, back down, back up, back down. Now, this is where it starts to give you a little bit of a clue what's happening, because you've got a low, you've got a higher low, you've got a higher low, now you've got a lower low, and you've got a lower high, okay? So we haven't had the bearish cross yet, but the market is giving us clues that this bullish momentum, this buoyant sentiment is kind of running out of steam. Remember, when a move runs out of steam, what will happen is you'll see price walk sideways, okay? So we put in a lower high. We finally get the cross here, which takes us back down to the zone once again. Consolidation. These are 30-minute candles, so if I broke it down to like a 5-minute chart, you'd see a whole bunch of candles across here representing that consolidation. And then off we go, and we've got an alert to consider being short. 29.01 from last night. It's taken us down 48 points so far. At $50 a point, that's almost $2,000 per contract. For the 10 contract trader, this is about a $20,000 move so far. Now, don't be tempted into trading more contracts than you qualify for. Okay, you need to earn the right. At least that's how we look at it. That's how our 24/20 blueprint looks at it. We want you to put together 10 consecutive days in SIM using our methodology and our indicators before you think about going live in the market with real money. Once you put together 10 consecutive days in a row where you reach your goal in 10 trades or less, then the blueprint will green light you to go live with just one contract. We want you to stay with that one until you increase your account balance by $2,000. When that happens, the blueprint will green light you to add a second contract. Now, you're adding that contract with profit you earned in the market. That's a huge dynamic. You're fueling your growth, you're scaling your business internally. You're not looking to outside investors or outside funding or anything else that will put you under the gun. No. I can't think of any better way to scale a business than from internal growth. And that's exactly what you do here. You're building your trading business. If you follow this blueprint, you're building your trading house on a solid foundation. Now, when it comes time to add the third contract, that's going to be based not on merit, but on the calendar. So going live, merit-based, adding your second contract, merit-based, because you've increased your account balance by $2,000. From there on out, it's calendar-based, so you know on what day you'll be adding your third and your fourth and your fifth if you don't run into any issues. And chances are you will. We all do. When you run into an issue, you don't bleed out on the trading floor. No, when you put together 2 days back to back where you don't reach your goal in 10 trades or less, you come back into SIM, we do one-on-one mentoring, we help you troubleshoot the issue. Was it you or was it the market? Don't always think it's you, because it's often the market, but it's kind of you because you haven't yet learned to detect when market conditions are not hospitable for trading. There are times when the market itself is looking for direction. You don't want to trade a directionless market. You want to wait, and that's what our lines in the sand really are about. You want the market to find its direction before you start putting on and taking off trades. So again, is that a real move? Yes. Is that a real alert? Yes. Is there really no exit signal yet? No, there's not. So could this turn into more than what it is? Well, you're watching it unfold right in front of you, okay? But again, let the fact that 10 contracts turns this into a $20,000 move, let that be your incentive. Let that be your let that be the thing that calls you to do the right thing, which isn't always the easy thing. And the right thing is to be patient, follow the blueprint, always use a hard stop, use aggressive risk management the way that we
New visitor.
If you do all of those things, then there is a high probability that one day you will qualify to trade 10 contracts. But just please don't put the cart before the horse, because that's just awkward and it never works out well. So if you can be patient, head down, shoulder to the wheel, nose to the grindstone, all that, and just let opportunity and success find you. That's the approach. That's the CFRN Emini method as defined by the 2420 blueprint, which is designed to help you go from 1 to 20 contracts over a period of 24 months. Okay? All right, let's jump to the Dow. Last night's Concierge Trade Alert on the Dow said to consider being short at or below 260.80. And let's see, zone-wise, We had a zone below at 25,950. It's 25,950 slash 55. I'm just going to put one of them here for the moment to expedite things. 25,950 slash 55. Below that, let's see, 25,950, 25455. We haven't gotten to the lowest, so we're approaching the lowest weekly trading zone right now in the Dow, and that's way down here at 25445. Okay, and then this below is, that's just from last week. Okay, so from 260.80, Valerie, if you got your calculator, your adding machine, 260.80 minus 255.30.
May I have the second number, please?
Let me make this simple on you. Alexa, 260.80 minus 255.32.
26,080 minus 25,532 is 548.
Thank you, Alexa.
Anytime. Have a good morning.
And you as well. I'm just a big kid. I enjoy that so much. So, what'd she say? 548? Yeah. 548 points available. That way you don't, I don't know why I didn't think of just doing that sooner. That way you don't have to keep your finger on the adding machine. That brings back, that's nostalgic for me, the adding machine. Okay. So you notice how we're kind of just falling, except when we encounter this weekly trading zone. And the weekly zones go out to the partners and passport holders every Monday morning at 6:15 a.m. Eastern, before Wall Street wakes up, as it has since December 14th of 2009. And we're coming up on our, we just had our 1-year anniversary of Logic 247. We're coming up on our 10-year anniversary of the weekly trading zones. And I'm often asked if I had to choose just one of our tools, for whatever weird reason, some alternate universe, I could only use one of our tools to trade. Which one would it be? I guess it would have to be the weekly trading zones. As you can see, and as you saw in the S&P, from the zone to the zone, back down to the zone, back up to the zone. I figure to get all the way to the zone, back up to the zone, buyers come in early again, back up to the zone, down to the zone, and from zone to zone, that's a 17-point move. That's 1, 2, 3. Then we get a partial 4, 5, 6, 7, 8. Now some of those were partials because buyers were coming in early. Okay. All right, so on the Dow, Alexa, 548 times 50.
548 times 50 is 27,400.
No, that's 20. That's with 10. You're getting ahead of me. Oh, I said 50. Alexa, 548 times 5.
548 times 5 is 2,740.
Okay, you heard it. The lady has spoken. And 10 contract traders can do their own math. What a way. What a Wednesday, yeah? All right, Russell. All right, last night, Concierge Trade Alert, Russell, short 1503. Alexa, 1503 minus 1466.
1,503 minus 1,466 equals 37.
Alexa, 37 times 50.
37 times 50 is 1,850.
Okay, so almost $2,000 per contract in the Russell so far. Now, we didn't check for an exit signal in the Dow, but I can tell you there wasn't one. Okay. And on the Russell, we'll find the same thing. There's John. Let me get your mic open, John. Hang on, here it comes. There we go. Hey, John, welcome to the show.
Hi there. You'll have to get a clip from the Johnny Carson show thing. Here's Johnny.
You know, I looked for one day, and I couldn't find one I liked, and then I got sidetracked. And so,
remember what I said a few days ago?
Which thing?
You got an uncanny knack at catching these trends.
Thank you. That's kind of you. Yeah.
Oops, I did it again.
Yeah, the markets have just been so kind, you know.
Well, it's the discipline. I wanted to spend a little bit more time talking about Jake Bernstein yesterday because, the discipline. Look, the human brain. Our worst enemy is our brains when it comes to trading.
Absolutely.
Because it's hard to foresee the magnitude of some things that can happen, and that's really the hardest part of it. You've just when you detect trend changes, you've kind of got to go with them, in the expectation that a good kind of mantra or discipline is when you go into a trade, rather than be one that is trying to grab a quick profit, try to say how big could this trade be, try to imagine that this thing could turn into something pretty dramatic. Now look, I know yesterday, I probably should have said this yesterday, but I kind of had a bit of a feeling that this panic buying that we got yesterday was kind of like a bear market rally. In other words, if you go and look at Amazon, I looked at a lot of stocks this morning, Amazon and Facebook and Google and all these leaders have made kind of double tops, and that's a pretty troubling development because they're breaking down from these double tops now, and they're looking very grim indeed. And because we've got a double daily reversal to the downside now, where we've given back everything we made yesterday and then some. And we talked about this a few days ago about the banking system in the East, Far East, right. In Asia is in dire straits, with 20 banks potentially insolvent in China alone, and then you've got the European banks in all kinds of trouble. Nearly never really got over the 2011 and the 2007-9 disaster, when some of the banks were semi-nationalized in the UK. And the German situation is just mind-boggling. You got Commerzbank that used to be a $250 stock down to about $4.50 or something. And it never rallied after 2009. It's been going sideways. Maybe it's sort of semi-nationalized even right now. But you know, and then there's Deutsche Bank, which is making almost new all-time lows today. And that's a very, very dangerous situation.
Let me bring up that Deutsche Bank.
Yeah. The DB, it looks just terrible. And, you know, they were going to merge Commerce Bank and Deutsche Bank. And to me, that would be like the blind leading the blind, you know. It just, look at this. It's just terrible. Now, you know,
what a fall from grace.
If they step in and turn it around from here and make a double bottom, then you could have some hope, and you can never rule that out, you know. Just the same as yesterday, something came out of the blue to save the day, you know.
Let me ask you, John, if this thing were to just suddenly, you know, break to the downside and it got below $5, would you see that as a buying opportunity?
No, I wouldn't, because the you know, when it breaks down below $5, institutions very often are forced to sell.
Well, they're forced to sell, and they certainly can't recommend it anymore in most cases.
Right. So I think it's really, I mean, look, you know, you have to ask yourself, Germany, you know, what's going on there, whether it's this immigration thing that has just destroyed the country, you know, this massive amount of immigrants that came in, and, you know, the whole of Europe is hinging on this. And then you've got, I mean, remember I said, you know, unemployment in Spain is 14%. I mean, jeepers. You know, obviously things in Europe are a long way, you know, just like light years away from where the U.S. is today. So the U.S. is the bulwark of strength. But now you've got Latin America blowing up. You've got the Mexican market actually is down pretty dramatically. And they had a lot of strife. They've had some big demonstrations in the last few days and things going on. So then you got Argentina, you got Brazil is slumping back into oblivion, and Russia's making new lows, or not quite, but it's breaking down. All the you know, the Chinese market. By the way, the Chinese market today, the FXI is on the point of making 2-year lows, I think, and the yen just made 3-year lows today, or in the 3-year lows, I think. So
we have a short alert out on the Australian dollar and the Swiss franc.
Say again, sorry.
We have an alert out to short the
they've turned down
and
again.
the Australian dollar.
They've turned down again, which you know, all the currencies. You know, the dollar is.
Here's the
you know, the dollar tends to go up when trouble hits. So safe haven type thing. There are a couple of bright spots that I should mention, and we've talked about this a little bit. If you could put up Amgen, AMGN.
AMGN, okay. Do you want it on daily?
Yeah.
Okay.
It just almost made I think it made a new high here in the last couple of days, this stock. New all-time high.
Not a closing high, but an intraday high, it sure did.
Right. And I really am starting to think.
This is a biotech?
Yeah, it's a real bellwether for the pharmaceutical sector, and I think that the first stocks that are going to rally off this bottom that's coming maybe in the next month or two is going to be the pharmaceutical sector. Intercept, if you look at ICPT. It's, you see that? It's kind of going opposite to the rest of the market. Started to, put it that way.
Yesterday, we talked just briefly about banking stocks.
Yeah.
And I asked you, do you think we're about to see banks, the financial sector, head lower? And you said, yeah, I think we could. I just had a thing come across my screen. Financial stocks led by Citigroup, intercorrection, down 10% from the highs on yield curve concern.
Yeah, it's very bad. You know, the Fed has messed this up big time. They should have done half a point out the gate the other day, and they should be doing another quarter of a point or even a half a point.
I've heard talk of a half. Could you explain to the audience what the inverted yield curve is? Because they're probably going to be hearing a lot about it.
Yeah, the shorter term money is higher than the longer term money, so short term interest rates are rising faster than long term rates. I think if I'm wrong, somebody's gonna call me out, but I think that's what it is.
No. I believe you're correct.
Yeah.
In fact, I can get a clinical.
And so what the Fed needs to do is lower short term rates fast to get them lower than the long term rates. They need to fix this immediately.
Do you think now? The other day when we had a horrible Monday, Trump came out and changed his stance on the tariffs, which gave us the rally. So now after the big rout today, do you think we could expect something additional from Trump?
Yeah, you can never. That's what I say. If somebody comes in, if somebody comes, maybe the German government comes in and steps in to Deutsche Bank or something, or
there it is, just exactly what you said. An inverted yield curve occurs when long-term yields fall below short-term yields.
Yeah. Thanks. So and this is kind of freaking people out because it's got a very good record. When this happens, it's if the Fed doesn't act quick enough, it just gets worse. So that's why we're down as much as we are at the moment. Now, remember, sometimes when we're down 600 or 700, the market tends to stage a rebound, so you can't rule that out here today. And you never know, we might have another overnight miracle as well.
Absolutely, you can't rule out that possibility.
Yeah, but it does look really bad. And as a matter of fact,
we had two swing trades trigger today, so we'll see how those turn out.
A guy on Twitter tweeted me yesterday, and he was all excited about Baba and Baidu, or Baba particularly. Said it looks great, and I said, good call, but be careful. Because it looks like it could. I said it might. I'd be more comfortable buying another new low in Baba, around 150.
I mean, we've got this double top. We've got a high, a lower high, and a lower high, and this may be yet another lower high right here.
Yeah, so I'm not really ready to rush into that. And if you put up Baidu, because it's kind of interesting. Baidu's been a real dog.
Now that's the Chinese equivalent of Google.
Correct.
Okay.
I mean, look at it. It's amazing that the way this stock's been cut down.
Now, what do you think is different about Google? Of course, their chart is the polar opposite of this. Since they're in the same business.
Google doing a lot of stuff with the Chinese government is probably negative for Baidu,
Oh, did you hear about that Google insider who released those documents?
Yeah.
Valerie sent me a thing on that earlier today. What do you know about that? And
no, tell me more, because I
here,
might be
let me grab my phone. I'll look it up on. I've got it right here. Let me bring it up on the screen from here.
By the way, the gold is acting really bullish today. And you asked me yesterday, it's kind of getting up towards that spike high that it made yesterday, and the silver as well. And in all honesty, given everything that's going on, there's a very real possibility we could have an extreme upside spike, an extreme upside move in gold and silver here, if anything really catastrophic sort of breaks out on this banking issue.
Google Insider turns over 950 pages of docs and a laptop to the Department of Justice.
Holy mackerel.
Former Google Insider claiming the company created algorithms to hide its political bias within artificial intelligence platforms, in effect targeting particular words, phrases, and contexts to promote, alter, reference, or manipulate perceptions of internet content, delivered roughly 950 pages of documents to the Department of Justice's Antitrust Division last Friday, I guess it was. The former Google insider, who's already spoken to the nonprofit organization Veritas, met with Sarah A. Carter, that's her name and that's her website, I guess, sarahacarter.com, on several occasions last week. He was interviewed in silhouette to conceal his identity in group's latest film, which they say exposes bias inside the social media platform. So let's just go to saracarter.com just to see what it looks like. And this could be, well, we have so many explosive things happening with the elections, coming up. So here's saracarter.com. It looks like a sheet of me, but
she's on Hannity a lot. She's been a big expose of the Russia.
Can you believe this? Another bloody weekend in Chicago. 5 killed, 43 wounded. I mean, there's like a mass shooting in Chicago weekly, or it seems like daily. Bruce Orr warned FBI leadership that Steele was biased against Trump. Overstock CEO turned over docs to DOJ on FBI's Russian. Well, there's our friend, Patrick Byrne. Overstock's Patrick's delivered to the Department of Justice a number of documents, including email and text messages from April. Well, I'll have to keep an eye on this site. I wasn't familiar with it prior to this. Wow. Okay. Where were we, and where do you want me to? You were talking about gold.
I think Google may be in the world of hurt now, maybe in some pretty big trouble, because this is out of control, this bias stuff. Apparently, somebody said that if you Google this Jeffrey Epstein guy, all you see is pictures of Trump. They try to kind of smear Trump with this thing. He's got absolutely nothing to do with it. And then now you've got the Scaramucci thing going on, and this Twitter. I mean, I don't understand why Twitter is, doing what it's doing, because
what are they doing?
Well, all this, bias against the patriots, the Republicans. That's very extreme. They're chopping people's numbers down every day. And I got bumped out. I got through the night without being shut down last night. But I retweeted that thing about Chris Cuomo a couple of days ago. Did you hear about that?
No, say that again.
Chris Cuomo kind of got ambushed somewhere.
In that bar? I saw that.
That Fredo thing.
Oh,
and,
my goodness. Yeah, I mean, how's he dealing with that?
So I retweeted that. So I retweeted what Trump put out there. And they shut me down overnight over that. I mean, can you believe it? It's just incredible. So
for those of you that don't know,
it cost me a few hundred followers. It's hard work getting these followers, and then they just snatch it away from you in a couple of days. It's really a pain.
Let's see.
But I mean, he certainly exposed his vitriol, and
here, let's listen to this real quick, John.
There's a lot of language in it, so people should be prepared for it.
Yeah, guys, send your children out of the room. This is adult language, but this really happened. So move the sound.
It's actually pretty funny, but
it is. All things considered, it really is.
I'm going to break you in half and throw you down the stairs and stuff like that. It's like something out of a movie.
He started it, got in Cuomo's face, and by the way, his 9-year-old daughter and wife were there. Take a look. Don't insult me like that. I didn't insult you. Call me Fredo. It's like I call you punk. You like that? You want that to be your nickname? I didn't call you that. You called me Fredo. You know my name's not Fredo. Your name was. You did not think my name was Fredo. Don't be a liar. I'll ruin you. I'll throw you down these stairs like a punk.
Throw it down the stairs.
So you can swim? Why don't you do it? Take a swing. Why don't you call me Fredo? Take a swing. Take a swing. Last night on Twitter, I defended Cuomo. He did not start this because I don't support harassment of any public.
Now, I'm not hip to this whole Fredo thing. I don't know why he got that nickname. I don't know what it means. Is it something we can talk about in mixed company?
It's from The Godfather, and
okay.
And he's been called Fredo before, even on air, in a kind of a joking way. But I guess somebody called him out with it, because it's all to do with the governor, and because his brother, the governor, and he's the little brother, the Fredo, I guess. So
Chris Cuomo once referred to himself as Fredo in a radio interview.
yeah.
Federico Fredo Corleone is a fictional character in The Godfather. Fredo's portrayed by American actor John Cazale in the film. Okay. I haven't watched that movie in so long. Maybe this weekend be a time to watch it again.
So it's but and you know they call it
So you
somebody else
retweeted
made
this
reference
and they turned you off?
Cuomo Mafia, the Cuomo Mafia, you know, which a while back.
So they shut you down when you retweeted that? Is that what you're saying?
Look at this. There's the explanation right there.
The Cuomo's, The Godfather, and the Fredo insult. Mario Cuomo, the son of Italian immigrants in Queens, whose supporters said could have sat in the Oval Office of the Supreme Court, spent years wrestling with the stereotype of Italian Americans as gangsters and thugs. Okay. Interesting. An angry Mr. Cuomo. Now, supposedly this guy, now I believed the guy. He seemed very convincing. The guy walked up to him in a bar and says...
He was the weak brother, you see that? So you know, obviously this is a pretty prickly point with... Cuomo,
right.
You know, because
definitely
of
struck a
big
nerve.
brother and all that.
It's tantamount to the N-word for Italian Americans. So, okay, now I understand a little better.
And the big brother's kind of lost it, as you know. He's come out with some wacky stuff in the last few months.
The middle son, Fredo, is a hapless twig.
We're rallying a bit, like we said here. So I think the market's going to stage a bit of a rally here.
The middle son, John Fredo, is a hapless twig who is sent to a Las Vegas casino to do business under the tutelage and protection of another crime boss. So they just trying to get him away from the business. Okay, so you're referring to S&P or everything? You said markets are
it's
staging a rally?
Just starting a little bit, yeah.
Yeah. Okay, and this will give us an opportunity, I believe, for a re-entry on the short side. Anyone that's not already short, based on the previous Concierge alert and the Logic 247 alert. This pullback here, we'll see how far it goes. We'll see how convincing it can be. We've still got 2 days left in the week. And, John, this is our lowest weekly trading zone for this week right here, 31.2. So we would expect to see, some support here and a bounce. Whether it can hold back, again, it's going to depend on if Trump, I think, comes out with a tweet or makes any other changes.
I
Or something
didn't
to
look at this.
encourage.
I didn't look at this yesterday because I just, I got so many things going on at the moment. I didn't have time, but my work gave actually a pretty strong sell signal. I know we were looking at that yesterday, and I didn't look at this at the time, but it actually turned into a pretty strong sell signal last night.
We looked at the weekly chart yesterday. Now look at this. I said this on the show yesterday. I don't think I've ever seen any stronger buy signal than what we saw in this weekly chart yesterday.
Right.
But again, it's a weekly chart, folks, and the week's not over.
We stressed that, and
the week's not over.
And the other thing is, look, it did go higher, but we did also point out that if prior to this rally, actually, that if this was taken out, this hanging man, which already pushed the market down halfway, over the weekend, was a very risky proposition, and it's sometimes how real bear markets can get triggered. And now look at that. I mean, what's that?
That's daily S&P.
Okay. Yeah, that looks terrible, jeepers. Yeah. So it's changed everything, and of course the same. It's being reflected in a lot of different stocks, and not only that, the Russell, which we were commenting on when I came on, is making substantial new lows today. It's down big. It's down 46 points. So That's a massive down day.
Now, this is how big this dynamic is, folks. Reverse fibs from the most recent swing high, all-time historic high, to the most recent swing low on the daily chart, we retrace to the 62% fib, okay? Now that's the reverse fib. Now if we come over here and take our fibs and we go from the most recent swing low up to that all-time historic high. My computer can catch up here. There we go. We hit a 62% retracement this way. So on a daily chart, to see a 62% fib hit and then the 62% reverse fib hit in the same week, that's not something you see every week. I think
and actually, remember we talked about the advanced decline breaking down and how that would be.
Let's look at that.
It broke down yesterday as well. So it's really troubling. But on the positive side, with this rally that's gaining a bit of traction right now, remember there's the Fed, the Fed plunge protection team probably back in action and doing what they can. And you never know, the Fed could come out with something. It's a long time since the Fed made a move, outside of a meeting, in between meetings, but they could do something like that.
Hey John, would this change? Would any of these options here?
I mean, the interesting thing is Trump. Trump's got an uncanny knack of being right about just about everything, sooner or later. And I mean, when you look at all the things that he's been, hammered over, from accusing Obama of wiretapping and spying, which just like 100% of people said he's off his rocker. And then telling the Fed that they just totally blew it, and now he's 100% right. It's just no getting away from it.
Right.
And remember, Dwayne, a year ago on this show, what did we say? They're 3 months behind, 3 or 4 months behind. They should have started lowering rates back in second quarter, is what we said.
They never should have increased them as much as they did.
Yeah. We remember we didn't know that at the time. This was a year ago. We said that the Fed should be lowering rates by the second quarter of 2019, and they finally did it. But they were a quarter late.
I was blown away the day that you mentioned the percentage. I knew the Fed had raised the rate, a couple times, quarter point, but I'd never looked at it from the viewpoint that, what did you call it, a 900% increase?
Yeah, and that's what nobody understands. The real estate people understand it, and the people who do all these mortgages and everything, because it affects these all the financings. So, and it causes a lot of hedging and stuff, and it's a dangerous thing because that's where all this $260 trillion worth of derivatives are all kind of locked up in interest rates. So, if it ever became a 1979 type situation, which you can't rule out happening, where suddenly, remember, in spite of the falling markets around the world, the central banks are pretty aggressively pumping and stimulating and lowering rates now to turn that around. So if that starts to have an impact in the coming months, you could get an interest rate spike. And we don't know. I mean, we're going to get an interest rate spike between now and 2023 for sure. I mean, that means we're going to get some kind of a gigantic interest rate increase. And in fact, I was thinking, did you hear about Joe Biden? What he said about that he was going to reverse the taxes of Trump?
No, I didn't hear that.
Well, how we talked about, 2021 is kind of looming faster than you think, because nothing is sure in life, and even though it looks like Trump's going to win at the moment, if he were to lose, and God forbid, Joe Biden got in there, this could be that 21-22 hit, just like what happened in 1921-22. In other words, do you realize, I mean, if they reverse these tax cuts, the Dow would plunge 10,000 points, like, you know, in a matter of days or weeks, and then probably go down another 5,000. So you'd give back about, you know, 15, 17,000 points. And, you know, maybe we'd get down to 8,750, kiss the price of gold, because this would cause gold to skyrocket. And, you know, then maybe they'd backtrack and say, maybe cutting the tax cuts is not a good idea after all. And then the market could absolutely rebound almost back to the previous level. That could happen. Something like that could happen.
Yeah, it really could. And
yeah, and remember, if you do get a Dem president in, I mean, they're going to pump up the economy just like. So it could be a kind of a roaring 20s, a recipe for the roaring 20s. As I say, you know, the way I look at it is they're kicking the can up the road right now to try and keep the economy strong and keep the market strong. But ultimately, the last time they kick the can down the road, I think, is going to be in between 2021 and 2023, and it's going to be a big deal. They're going to do stuff like we've never seen before, possibly even buying equities to get this market going. But by the way, if you can put the S&P up again, sure, like you did yesterday with going back to the 70s and 60s.
Oh, okay. You know the S&P or the Dow?
Whichever one you were looking at yesterday.
I think I had the Dow up yesterday.
Yeah, put up the Dow. That'd be great. Yeah.
Okay, let me change this back to candles. Now you want it on daily, weekly?
The way you had it yesterday.
I think I had it. I think I might have had it on monthly, John. At one point, I think we.
Yeah. Squeeze it right up. Now, you know, I mean, there's no question that's a third wave like I've never seen in our lifetime. But given what's going on there with this current correction activity, there's probably a couple of years of that ahead, you know, and it could be, you know, given the size of the 1-2, you know, and going up into the 2000 and the 9 year and everything else, you know, the likelihood of the 3-4 being pretty dramatic from a range standpoint. Mm-hmm. We could conceivably come back to 22,000 again and go right back up and then go to a new high, because the fifth wave, you know, in other words, if you look at the timeline of that, you know, we've gone from 2009, you know, it's a 10-year third wave, right?
Okay.
So the fifth wave could conceivably be, you know, 7 or 8 years. It's not usually as long as the third wave.
Okay, I was just going to ask, what does the fifth wave typically
Well, the fifth wave is the final run for the roses, which is kind of like what the 20s was back in the 1920s. In other words, it was a time when all asset classes went up and including gold, by the way, you know, because in the 30s, the gold went crazy. And so it would be a time when everybody, you know, has a feeling of well-being and you know, employment and everything else. And then sort of, you know, by the time 1929 came around, I mean, that everybody thought there was no tomorrow, you know, everything was going to be fantastic, and right before the Depression. So and I think this is the third wave, and then, you know, there'll be a big consolidation here over the next couple of years into sort of 22, 23, you know, and then after that, in fact, given the, I mean, we could have something, you know, the 3-4 has a similar pattern of behavior. When you get a simple 1-2 like this one, right? ABC, the 3-4 tends to be complicated. So it could be very, you know, dramatic up and down, but the range could be similar. Okay. So you could have a 10,000 point range, you know, maybe even from a higher level. And then ultimately the fifth wave should be a vertical wave, you know, it should be absolutely, you know, could potentially take the Dow up to 40 or 50,000.
Wow.
We could hit 50,000 by 1929 or by 2029 or 2030, something like that. And think, I mean, in 10 years' time, I mean, we're going to have flying cars and all kinds of things that are, medicine breakthroughs, jetpacks. It's going to be crazy.
Now, I know that the technology is basically there for the flying cars and other things. What do you? How about mass adoption? Are the people ready for the machines?
They will be. They will be. I mean, it'll come in time.
Well, I mean, when you get to the first generation of a kid who grew up in a world where there was flying cars, that's just it'll be like no big thing to them.
Yeah, exactly.
That's how it's always been. And
it's like millennials and cell phones and things.
Exactly. Yeah, my son has never known a world.
They don't know what the yellow pages are.
Yeah. I was looking for some yellow pages the other day. I was up on a ladder trying to change a filter in my air conditioning unit, and I was just a few inches too short because I had a little step ladder. And so I asked my wife, I said, honey, have you seen a phone book lately? She goes, a phone book? What do you want with a phone book? And I said, I want to stand on it. It's about all it's good for these days. I never found one. They used to drop them out. Remember they used to, at least in Phoenix, they would always drop them out on your front doorstep, like once a year. You didn't ask for it. You didn't pay for it. They just delivered it. So they could sell advertising. And there's a lot of lost revenue there, I suppose. I haven't looked at a phone book. I used to live out of phone books back as a young man in my 20s, running call centers. We used to cold call right out of the phone book, residential business. But those days are gone. Nobody answers the phone anymore. It's a caller ID. Exactly. If you don't recognize it, people don't even pick up. I know I don't.
Yeah.
What else you want to look at?
The grains are suffering again today. Although the beans are not getting clobbered anything like the corn.
Okay. All right, now we have one of our traders, Ryan, who's also a farmer. He's very bullish on corn, even though this report came out, and he knows everything that's happening, but he's still bullish longer term. And I've got some of his reasons here in the Telegram channel somewhere. I'll see if they surface when I look for them in a minute. So corn. Well, here's corn futures. And we go to daily.
Corn is in danger of going to new lows here.
Wow. Guess I didn't realize how bad it had gotten.
Remember Mike called the bottom of that thing back in about 350. Remember that?
One thing Ryan mentioned the other night is that calls are getting pretty cheap. Mm-hmm. I wish Bert, hey Bert, if you're tuned in and listening in, would you pop in and talk to us about options for a minute, if you're out there? Do you ever do anything at all with options, John?
No, because I use these CFDs, which is the same really as options. They're better than options because, if you can buy Microsoft for 13 grand instead of 136 or whatever it is, mm-hmm. It's kind of like being in options,
Okay.
Same kind of leverage. You have to be, it's almost like a futures on a stock, really.
Okay. So yeah, if corn doesn't find support by $3.40 a bushel, then now, what do you think the reason is? I'm gonna go to the channel and see if I can pull up what Ryan, the last thing Ryan shared with us. And Ryan, I don't know if you're out there in the audience, but if you are, if you message me, I'd love to bring you on. Let's see. Okay, Ryan said, I don't know if this is everything he said. Where did that go?
That gap, I mean, it really looks like it's going to, it could go down to the lows and then it could potentially reverse upwards from there.
Okay, Ryan had said the other day, I guess it was the day the report came out, he believes corn will find a bottom soon. Most farmers believe it will find a bottom soon. Well, they gotta hope it will. Late planted corn won't yield as much as normal planting. and report shows normal yields. Harvest will tell the story. He shared a lot more than that. I just don't have it at my fingertips right now. I'll try to get that together and we'll talk about it tomorrow. Because I do plan, once this thing turns around and once I see light at the end of the tunnel, we will have because this move has just been too dramatic. I know that it's going to recover at some point, and we're going to participate that via swing trade, but I got to wait to see some signs of turning first before I jump out there. So, what else you want to look at?
No, listen, I think we covered everything today. So, thanks very much for the invite.
John, thank you very much.
Okay.
Have a great afternoon, and we'll talk with you soon.
Thanks.
All right. All right, so there's the S&P. We've looked at that. The Dow, we've looked at that. Russell, we looked at that. Alexa, 37 times 50.
37 times 50 is 1,850.
Okay. That's per contract. NQ, I just drew fibs on the NQ from the most recent swing high on a 30-minute to the most recent swing low. So the shallowest possible Fibonacci retracement is the 24% fib, which I've highlighted right there with that little rectangle. So I'm looking for price to pull up to that, find some resistance, and then that'll give us an opportunity to be short again, back down to test these lows. Now let's drop these on. Okay, now that's coming in at the 38% fib, right here. 38% fib at a weekly trading zone. So here's my take. Highest probability is the 24% fib, but if we get a reaction off of there, it could be muted because I think the market just may want to see this. Not only will these three things coming together, a weekly zone, the BBC, and the 38% reverse fib, all of those three things individually would serve as potentially good resistance. Put all three of them in the pot, and almost certainly, if there was such a thing in trading, as far as I can go, is the highest probability thing is for price to get up here, possibly even blow through the 24% fib, because not only will these act as good resistance, but as price is making the journey, they act as a magnet. They draw price to them so they can slap it back down, right? So we'll see what happens. I do know that if we get back up into this area, most certainly we'll have a good opportunity on the downside. Now that's the high probability. I don't know what's going to happen next. Neither do you. Neither does the guy who sent you that email this morning or that website you visited yesterday where they proudly proclaim and crow that, of course, they know what's going to happen next. That's the business they're in. Well, it's not a good business to be in because if you've read Genesis back in the day when God laid the foundations of the earth and all the principles upon which we operate and spin, he gave man all kinds of abilities and talents, but he drew the line at our ability to change the past or know the future. He did speak to his people a few times through prophets, right? But it was he that knew the future, not the prophet. The prophet heard from God and relayed the message to the people. So, again, in Genesis, God drew the line at giving us the ability to change the past or know the future. So anybody that tells you they know with certainty what's going to happen next, you got to just know they're pulling your leg. Okay? Now, they might be so deluded that they don't realize that maybe they actually think they do. Because as with a coin flip, I mean, they probably get it right about half the time. So maybe they've convinced themselves that they really do have a unique gift that allows them to see around the corner. Only God can see around the corner, because He built the corner. Best we can do is a high probability, based on prior market behavior and current market behavior. We don't try to tell you that what we do is some ancient secret that we found in an urn in the Gobi Desert, in a clay pot, written on papyrus. No. There's nothing mystical, nothing magical. And I shouldn't say those things because I know a lot of people want mystical and people want magical. But I just won't sell you any pie in the sky. If you don't want the truth, we don't have anything else. We just have market truth. What we do is based on a logical approach to price behavior. That's what we hang our hat on. Now, well, is that any good? Could something like that work? Well, I guess ultimately you have to be the judge of that. Week 54, week 53, 15% of 84 alerts were stopped out. I'm sorry, 18%. 15 alerts, 18%. And then so far this week, without magic, without voodoo, without witchcraft, without any of that stuff, without any seeing eye dogs or crystal balls or any of that, this is what logic did. Nothing secretive, no black box stuff, pure logic. And these alerts, we don't just give you the alert if you become a passport holder. No. Number one, we teach you what to do with the alert, but far more important, we teach you how to see the alerts yourself. So as you're learning, you don't have to starve because you have a steady diet of alerts to work with. And the more alerts that come in and the more alerts that you take action on and you study that chart, pretty soon an alert is no longer an alert, it's more of a confirmation. Because by the time your phone or your computer goes dee-dee-dee and the little telegram comes in with the alert, you've already spotted everything setting up. And so the alert just confirms what you are now seeing yourself in the chart. Don't let yourself be a slave any longer to the man behind the curtain. This is an invitation to become the man behind the curtain. That's a powerful dynamic. The opportunity of a lifetime is extending forth its hand. All you got to do is go to eminitrainingschool.com, eminitrainingschool.com, and take a 5-day trial. You don't have to believe me. I'm just some joker on the internet. Take the trial. Sit in the room. Use our methodology. Use our indicators for a week at no charge. No credit card required. You could do exactly what we do for a week and it won't cost you a dime. At the end of a week, you can make a well-informed, rational decision as to whether or not what we do is right for you. When you get to eminitrainingschool.com, we have a artificially intelligent bot that will walk you through getting signed up for the trial. Tell that guy to close his mouth. That's too funny. Welcome to CFRN. I'll help you set up your free trial. I'm going to email you a link and a password to get things started. Click here to start. So you click that. Type in your name. Hit enter. It's a very courteous bot. Then a dash of email. Enter. And bang, you're on the trial. Okay? Check your email. Whatever email you put in, you're going to get the link and the password to get rolling. Valerie will be in touch with you. All the different links that you need. to get the indicators on the platform and get the platform if you need a platform. She'll take care of all of that. Now, if you get hung up anywhere along the way, or you just have a question, scroll on down and talk to a human. Have a question, need it answered right now? No problem. Click here to be connected to a human.
New visitor.
Same process.
Incoming new visitor.
And now you're talking to Valerie. How cool is that? On a scale of 1 to 10, I'm going to give it a 9.
It is very.
Do you agree? Do you concur? Awesome. Hey, there's Garrett. Can you open up Garrett's mic?
New visitor.
No, Tom. Tom says, is your analogy that your alert is now knowing what is around the corner? No, Tom. Exactly what I said was, we don't know what's around the corner. We don't know the future. No one does. Not man, nor beast, nor algorithm. Only God knows what's going to happen next. What we know is what the next high probability thing is, which is a world of difference. So I think I was pretty clear on that. So, Garrett, are you there?
I am.
Hey, welcome to the show, man.
Hi.
Big times in the market.
What's that?
I said big times in the market.
Oh, yeah. Well, it's, the volatility is incredible. I don't know if you saw my last observations.
I didn't read it cover to cover, so anything you want to share, we would love to. Love to hear about it.
I just
you want the chart?
Pointing out a lot of things that, we're on shaky ground here, and we're having, a lot of this volatility, and that's the kind of stuff. I'll show you a picture if.
Yeah, let me send you the chart here real quick.
See if we can do the screen share.
Yeah, we can. Okay. Make presenter. Yes. Here we go. Now you got to do is
there we
accept.
go. Okay.
Okay.
Yeah,
Yep, you've got it. I can see. I see this chart you have with the little guy.
Yeah, that basically all I'm doing there is this is this month. This is and all I'm doing here. Each of these are 1 day. I mean, this is just a 1 day move from the low of 1 day to the high of the next. And when you look at these points, I mean, it's absolutely mind-boggling. I mean, you're down 505 Dow points here. You're up 456 here. Now, this is a 2 day move, okay? This is one day to the next. But going into the next day, 2 day, down 1,650. So even though it's 2 days, the average there is 825. So it's bigger than either one of these if I wanted to make it a 1 day. Now you go here, you got another 515 point move back up, 598 down, 973 up. This is 2 days. So you're talking a little under an average of a little under 500 on these 2 days. We're 589 here, 602 here, and 791 so far today. I mean, this is absolutely unheard of. I mean, these are enormous swings in the market, and basically in the last 2 days, for a while there in the morning, today we were down 400. Yesterday we were up 400. The day before that we were down 400. Right in the morning. So my guy here, this is it's like the guy standing on the first tremor of an earthquake, before the big one comes. And I think that's what we've got going on here. I've been mentioning this for quite a while. We're looking at, see, I can bring over another chart here. Well, maybe I can, maybe I can't. Yeah, here we go. This is just, a 30-minute chart, but it just shows, this was again, going back at the beginning of the month, and you get this breakdown here. If you're just looking at this, this is pretty good volatility, and then it's all the way back, and then it's down again. Then look what happens. Then you come down again, and now you're getting this 2.5 more times down to the low here. I've got, this is a little hiccup here, and this is a burp, and who knows what we're getting ready ready to do next, but and down here, boom, rally back up, and then of course, today I didn't even bring that over to the rest of the day here. That's, I guess, behind. I'll move this over if I can. Let's see if I can move that over. No, I can't. Sometimes I can. There we go. Well, I got part of it over. Okay, I give up. Anyway, I think I've got a fairly important date late in the month. I'm hoping, I'd like to see that be a high. We'll have to see. So anyway, we're getting, just to get back to that the other picture there, I think that pretty much shows what's going on. We've just got this wild volatility. And I think what it's setting up for is, I think we're setting up for a pretty nasty double-digit decline. For me, I'm kind of looking late in the month for that, but when this stuff is going on, it's just telling you that we could be in the midst of it right now. I mean, this could be a 1 ABC 2, and we're starting 3 of 3 to the downside. So I just think people get very, very complacent with. Oh boy, let's see. Excuse me a sec, Dwayne.
Sure, Dwayne stepped away as well. So Valerie here, filling in.
They should be doing that here. No, I can't. I'm on the interview. I'll call you back. I just got informed that in Hong Kong, they're waving the American flag and singing the national anthem. Something that our own citizens apparently have forgotten how to do. Seems like we've got you there, Dwayne?
Dwayne stepped away. This is Valerie.
Hi, Valerie.
How are you?
Yeah. No, I was just mentioning, I just got a call, and here's the people in Hong Kong waving the American flag, singing the national anthem. And, getting our own people to do that anymore is a tough thing to do. I mean, it's just, we've got a world that's turned upside down, and this is part of the cycle. We happen to be following the cycle about as perfectly as you can follow it. And it's unfortunate that we as Americans, and I guess probably as people on this planet, we don't learn from history. We don't pay attention to things. We let our television do our thinking for us, and the result is you get to follow the cycle. If you wake up and smell the coffee and start to think for yourself, you get a different outcome. But so far that hasn't happened.
What is this talk, Garrett, amongst the millennials that everybody's suddenly awake? That went right
woke.
That went right over my head. Awoke. Or woke?
No! What was that? I'm sorry, I missed.
What did you say, Valerie?
The term they use is woke.
Okay, so they're now awake. What is it? What have they awakened to?
Oh, I don't think anybody's awake at all. I think they're sound asleep.
So do I. That's what makes it so funny.
Yeah, I mean, they're not. I mean, the problem is we blame the millennials, and I'd say, really, how did they get that way?
Yeah,
was it a lack of? Yeah, was it a lack of good parenting, maybe? I mean, it happened in the school system. The schools are set up to do that. This is a plan. I've been saying this for a long time. It should be obvious. Anybody who's surprised at Jeffrey Epstein that what happened there happened has got to be sound asleep. I mean, this is what happens when we get people with evidence. You know, they die. And
especially if you know the Clintons.
Any other government would have, there wouldn't have been a hair harmed on the guy's head. They would have been protected. And they say, "Oh, gee, the prison system needs more money." I said, "Really? You got a star witness, so you can't pull in the National Guard or maybe the Army, or you've got to hire a part-time guy? Are you kidding me with the star witness?" And I blame everybody from the president down for that. I said, you know, are you people, you know, why are you just insulting our intelligence? Is that what's going on? Is this just a massive insult until people finally wake up? You know, I mean, how obvious is it? You know, don't we have a history of people that have information that are about to go to court and somehow they die? And oh gosh, I guess it's just another coincidence.
Yeah,
it's no coincidence.
Over the years.
You know, I mean, none of this is a coincidence. But you know, the unfortunate thing is, you know, we've allowed the schools to raise our children, which is, you can see, and if somebody wants to take the argument, I'll say, fine. You want to compare the students today to the students going back a few decades? You know, it's just, and even a few decades before that. Sure, you have your star pupils that do a good job, but the masses across the board, you know, really are ill prepared for much, you know. And I saw a very good video. I think Denzel Washington was doing it, as a matter of fact, which was nice to see. And he was talking about people with, you know, their face in their iPhones. And it's like, you know,
yeah,
it's like I say, this isn't an organic situation that just happened. This is following a very, very well planned out plan. And it's about the New World Order, and they've been telling us that since 1972, but I guess, you know, nobody bothers to pay any attention. But, yeah, pretty exciting days in the market, huh, Dwayne?
I'm telling you, man.
So
yeah, I mean, and this volatility, I mean, we're no closer to solving the problem with Iran. Maybe we're a little closer to solving the problem with China, but I don't think so. We have a presidential election coming up, so this volatility, not only is it awesome for trading right now, I think it's going to be with us for quite some time.
Well, I'm sure if we had Elizabeth Warren or Bernie in there, all this would be fixed and we'd have no problems. And if we took it a step higher, we could get the nice young Ocasio gal, and she and the other gal could probably solve this whole problem.
Oh, my.
We got nothing to worry about. Yeah, it's amazing how I mean, you know what would have happened if you had, if you go back, if you went back to the 60s or the 50s or even the 80s, and you brought forth the, you know, AOC, it wouldn't have happened. People would have said, "What are you doing? What you don't have children run the government. What's going on here?" Same thing with the little Muslim gal, and same thing with so many of it. In fact, that's what would have happened with Barack Obama. They would have said, "Excuse me, this guy's never had a job. What?"
Yeah, we'll just gloss over the part that he wasn't born in the United States.
Yeah, yeah, exactly. And by the way, they would have figured that out in a heartbeat. There wouldn't have been pushback on that to the point where, I mean, you know, there's stuff on the internet where they show his birth certificate. They didn't even call the hospital that back then. There weren't any Kenyans at the time. You know, I mean, Kenya wasn't a country at that point. So it's, you know, I mean, there's so many things. I would say, oh, well, no problem. And supposedly he's got a
well, now the talking point is, well, it doesn't even matter.
Exactly. Yeah, it doesn't matter. You know,
it does matter.
By the way, didn't Hillary Clinton say that? At this point, what difference does it make?
Yeah.
You know, the people died. We don't care. I didn't die. Doesn't bother me.
It was the will of the people that he becomes president. So, yeah.
Hillary's saying, hey, I seem to live through all these things, you know. Vince Foster's dead. Those people in Benghazi are dead. And Seth Rich is dead. And, you know, and now Epstein and on and on and on. But, you know, I'm fine. So What difference does it make? You know, and that's the thing. As long as it doesn't bother you, you know, why does anybody have to worry? So it's the beat goes on here. It's unfortunate, and but history says, you know, we've seen this kind of stuff before, and history says, what has the good Lord provided us with to save us from ourselves? And the answer is pretty simple. They're called depressions. This country needs a depression. Oh, that's a stupid thing to say, is it? I said, have you found a better way to get people to appreciate things and to you know, start to pay attention and to start to conserve and, you know, things like that? I mean, there doesn't seem to be a better way to do it. You can't talk people into good sense.
No, you can't.
That doesn't work. I've tried. I mean, let me speak for myself.
Common sense has become very uncommon.
Oh yeah, the common sense is out the window. There's no such thing. It's you know, listen to your, you know, you know, we've talked about this before, but the TV doesn't report the news anymore. What the TV does is selectively pick the issues and then tell you how to think about them and then make you angry about how you're thinking. And then they have the late night talk show host to do the same thing, and nobody can seem to pick that up. It's like, gee, if, even when you point it out to people, I said, don't you think that's odd that roughly half the country's conservative, half is liberal, whatever we want to call it, and all the talk show hosts are wildly liberal, 100% of them? How is that? You know, where's the you know, when you don't have a checks and balance, the guys, you know, even if you're on the other side of the fence, and by the way, there was a real, I forget the fellow's name, but he was a Democrat, voted for Hillary, and I've got a lot of respect for him. I mean, I consider him a good man. He came out and apparently had very good knowledge about how Google works and what they're doing. He says Google's affecting this election. They've swung many millions of votes towards Hillary. And he was voting for Hillary, but he was a good enough man to point out and say, that's wrong. You know, that's just not right.
Did you see the report? We talked about it earlier, this Google Insider that's delivered a laptop and 950 pages of internal Google documents about their algorithm and how they're, hang on, I've got it right here. Her name is, or maybe it's a pen name, but Sarah A. Carter. Does that ring any bells with you?
You know, that name does ring a bell for some reason, but I didn't see the article.
She's a journalist, investigative journalist.
That's what I thought. Yeah, I mean, how would an investigative journalist, maybe that's where I know her name from.
A former Google insider claiming the company created algorithms to hide its political bias within artificial intelligence platforms, in effect targeting particular words, phrases, and contexts to promote, alter, reference, or manipulate perceptions of internet content, delivered roughly 950 pages of documents to the Department of Justice's Antitrust Division this past Friday.
You know what's troublesome to me, Dwayne, is that this should be blatantly obvious to even the not very intelligent people in the country. First of all, I mean, that article shouldn't even have had to be written. It should be obvious that that's what's going on, and it's not just Google. It's Google and Amazon and Facebook and all these guys pretty much in cahoots to do this. Why in the world, if the party of the wealthy and the businessman is supposedly Republican, why is it that all the ultra wealthy are Democrat? What? How does that work? I mean, just as a simple question, how does that work? Why is Warren Buffett there? He's supposed to be, you know, good old Uncle Warren who drives his old 1965 car and lives in his old house and all. It's like these guys are playing us in a big way, and we fall for that. You know, oh, the Republicans are I don't at this point. I don't particularly care much for either party. I think both of them are so compromised that if we want to what we need is for people to get fed up and hopefully find somebody who's a libertarian and vote him into office, and maybe, start to, we're 200 some years down the road. We've talked about it before, where, you have your depression cycles and you have your revolution cycles, and we're right back at the point where, where there was the American Revolution. We've traversed that many years. We're due for a revolution again. And if you look at what's going on, boy, that's what it's saying. Now, half these people are misguided, and they want to do a revolution to socialism, which means that, they've apparently lost their ability to really think and comprehend things. The revolution that we need is back to what we did 200 years ago. We need to move back toward freedom. And people say, "Oh, we got too much freedom," and that may be true on one sense. But what's happened is, this is just the same cycle. The cycle is creation and destruction. It's up and down. When you're going up, you're creating. When you're going down, you're destroying. And whether people like it or not, the conservative, when you get to the bottom, everybody's conservative. It's the conservative that builds, and it's the liberal that destroys. And it doesn't have to be positive and negative. It's a cycle. I don't mean that as a negative, but the point is, if we're ever going to break that cycle, I mean, what happened in Rome? Did they get more liberal? And is that when they fell apart? Yes. Caligula, the whole thing. I mean, the same thing. It's the same deal. You've had almost the same type of liberalism, minus the change in technology. Everything else is pretty much the same, and it's very simple. I mean, as you get as the conservatism builds and your economy gets better and you make more money and you have good times, people get more liberal. That's just our DNA works that way. Conservatives get more liberal. Everybody gets more liberal.
That's true.
And then when it gets like this, we get, we're always in the process of moving from one extreme to another. And we've been running in this extreme for a pretty long time.
You brought up earlier the late night talk show host who currently seem to be trying to make a career out of raping and pillaging the Trump presidency. So I posed a question.
What you're doing is disgusting.
I posed a question earlier. I don't think you heard me, but I asked if Johnny Carson was a liberal or conservative, and I just Googled it up, and this is a piece written by Dennis Prager. He says, along with virtually every other American, I never knew Johnny Carson's politics. I would not have been surprised if he was a liberal, nor would I have been surprised if he was a conservative, a Democrat, or a Republican. In his 30 years as host of The Tonight Show on NBC, he never so much as hinted as to how he identified politically. He poked fun at whoever was in power, Republican or Democrat. The reason he didn't let on where he stood politically is that he believed he had a much greater responsibility to offer Americans of all political persuasions an island of good-natured fun, a place where everyone could laugh together every night.
Yeah, really. And again, but remember when that happens. Johnny Carson was there from, I'm trying to think when he started. Was it in the 70s? He had a long run there, but again, Johnny Carson was just like your presidents too. I mean, the president tends to represent the collective consciousness of the country at that point in time. Trump, of course, doesn't do that because we've got such a split, but Reagan did, and Kennedy did, and Johnny Carson did. The collective consciousness of the country was along. If I was going to pick a central decade even though he was around for a few decades. For Johnny Carson, I'd probably pick the 80s. Would that seem reasonable?
Mm-hmm.
I mean, it's kind of in the middle of where he was, and he was kind of the guy for that. That was a relatively conservative time period, and he's the kind of talk show host for that period of time. Now, now there's an agenda. The agenda is in our schools. It's there. I talk about it all the time, and nobody will pick up a book. And, there's, like I say, The Deliberate Dumbing Down of America by Charlotte Iserbyt explains and documents how our educational system was taken over and for what means. And it was.
The minute we ask God to leave the school, God is departing the building. Ding, ding. Look at did we have any school shootings back when, when I went to school, we stood every morning. We said a pledge allegiance to the flag, and we prayed the Lord's Prayer. Every day as a child growing up. And you know what? In high school, most of the guys in my senior class drove pickup trucks with a rifle rack, and they had a rifle on the rifle rack in the school parking lot. And you know what? There was lots of fights, fisticuffs, but no one ever thought of pulling a gun on another student.
Well, because it was a time of common sense, and the major difference, one is everybody knew right from wrong. Now it's hard to find adults who know the difference of right and wrong.
Yeah,
and their question is, well, their question isn't is it right or wrong? Their question is, well, who did it? Was it our guy? If our guy did it, it's right. If your guy did it, it's wrong. I said, what?
Yeah.
Excuse me? What is wrong with you people? But I mean, I get in that type of conversation with intelligent, employed, people that are, otherwise intelligent, and they're not making decisions based on right or wrong. When you take right or wrong out of the picture changes. And then the other thing that we had was the Lord's Prayer, as you say, and but even without that, you had the golden rule, whether we bring religion in there or not. But people did know the golden rule, and do unto others as you would have others do unto you. So people knew that, and with right and wrong and the golden rule, you solve a lot of problems. If you can get people to, almost anything that comes up in a schoolyard or anything else or any disagreement, hit them with, well, can you determine right or wrong from this, from a fair standpoint, and can you apply the golden rule? Well, we can make it more complicated, but 99% of the time that you're going to get your answer right there. And solving this problem, of course, will be a nightmare, and it'll probably be solved by a depression. But short of that, the solution is very simple. What has to be said to people is this working or not working? And if you think it's working, you're wrong, because we'll show you the numbers. It's not working. And you've got two things with our children, at least. One is they're far less healthy. You had, in 1960s, you had 4% of the children with autoimmune diseases. Now it's 48% and growing. So something's wrong. And gosh, we've got that Surgeon General guy in the FDA. I said, really? Why don't we stop wasting money on it? Because they're not doing the job, are they?
No, that's true.
This is not a difficult solution. The solution is we have moved away in a direction that's causing a bad result. So we need to move. There's only two directions. You only either move toward freedom or you move away from it. That's all.
Hey,
you move toward conservative or you move away from it. So
John's popping in, Garrett, because he's been wanting to talk to you all week. So he already left for the day, left the show for the day, but he's going to pop back in. He's got a couple questions for you. John, are you there?
Put me on.
John? All right, he'll be here in a second. He's got an open mic, so just go ahead and keep going. I just want to let you know he's going to pop in.
Oh, I was going to say, yeah, I've got to run pretty quick. It's one of those days. My daughter just left for San Diego State, back for her junior year. So it's always nice to have her back, and it's tough to see her go.
Yeah.
So.
Yeah. John, are you there?
Yeah.
Okay. You know what? If he doesn't pop in, I called him and told him. He said he was going to pop right on. So, but go ahead. Okay. Finish what you were talking about. And if he doesn't make it back, then.
Yeah, it's just that these things are fairly simple, and the unfortunate thing is like that quote that I mentioned from Huxley from time to time is we've had an evil group of folks, of which there are Democrats and Republicans, all sorts of people, seeking to do this new world order situation. Of course, you don't hear anything about it in the news because they own the news. Why would if you're the foxes running the hen house, why publicize anything negative about foxes? You're
not
don't
talking
talk
about Fox
about
News, of course, no. Just
well, yeah, but and even Fox News. I mean, it doesn't matter. Some are better than others, just depending upon your opinion. But all of them are owned by these guys. These guys who are doing this are very, very smart. They know human psychology. And they know and look what they've created. Just imagine how difficult it would have been to create this if you go back even to the 1980s. How do you get our youth and our adults? I mean, the adults are every bit as bad as the kids. They're so angry. I mean, we've got one friend. She posts on I don't do Facebook, but she posts on Facebook all the time, horrible things about the president. And if you engage her in conversation, I don't get involved in conversations on high-level calculus and nuclear physics or needlepoint or stuff like that. You know why? Because I don't know anything about them.
Right.
And the little that I do know, I'm nowhere near being an expert. I know enough to be dangerous in all of those areas. So when that happens, it's like, don't ask me. I won't say anything about any of those areas in Facebook because I don't know anything about them. And any comment that I make is not worthy of anything for that reason. Excuse me one second.
There he is.
Hi.
Hey, John. Jared's got to jump off here in just a couple minutes, but he was trying to hold out and wait for you. So he just had a phone ring, so he'll be right back.
Yeah, is that John?
Yeah, hi.
Hi, John. How are you?
Great, thanks. Listen, I was looking at that chart you put up there. It was very, very impressive, very nicely done. And
which one with my cartoon guy?
Yeah. And I didn't realize, I didn't put two and two together and realize you were on until Dwayne called me. So great to have you on. Certainly called it right. When we last spoke about a couple of weeks ago, everything you said has sort of come to pass. So it was a really great call on your part.
Oh,
and if you remember, we kind of my contribution was the 25th of July. I don't know whether you saw it, but Dwayne and I put up the 2011 25th of July chart, and it looked almost identical to the downturn that's kind of evolved since. And as I was saying this morning, there's some ominous looking double tops on Amazon and Facebook and some of these things that there's a very good chance that the ranges from now on could become much more dramatic, as we are experiencing already, and as your chart in July shows. So August shows.
Excuse me, I'm sorry.
Look at the ranges there, just
new
tremendous.
Visitor.
So
well, what's interesting about the 25th or the 26th is, if you took a trend line from the January high through the September high, you hit it right on the nose. And I was it's just out of curiosity. And then again, that's all you need. You do that on a daily or even a weekly or a monthly. It's kind of a big deal. But I took it down to a 65-minute chart, and it hit it on the nose too. It was unbelievable. I mean, the odds of that are happening are slim, and even down to a 65-minute chart over that. What are we talking about? A year and a half. Unbelievable. I mean, that'll be if that turns out to be the top, and I don't know whether it will, but it's a pretty good bet at the moment. That'll go down in the history book. If you're writing a technical analysis book, boy, you want to start with that one if that's the way that turns out.
Right. Good point. There's no guarantees, even if the Fed did something drastic here, like, did a rate cut between meetings or something, the market might interpret that badly.
John, it's funny. I don't know if I brought this up, and maybe I shouldn't, because jinxing yourself is probably not smart. But I have long-term work that I do maybe 3 times a year. So I tend to let it happen naturally. Every once in a while I wake up in the middle of the night and feel like getting up and doing that. I feel like that about 3 times a year. So it's not often, but I haven't had all things come together enough to produce a real meaningful long-term date since 2007, and those were in October and right on the day, July 19th, which was the initial orthodox.
Yeah, that was when we got to that was the first time we ever hit 14,000 point. What is it? 14,000.41, which read the same backwards and forwards.
Yeah.
Remember that?
Yeah.
that was July the 19th. Remember that? Jesus. Awesome.
Yeah, and it's funny. I'm not about to say that the July top was the top, although it looks like it. But I've got a date late this month, and I don't know what it means yet. I don't know if it'll be a high or a low. My assumption was that it would be a high, and that we'd fall apart hard in September, and then maybe the Fed would come out. If we were falling early in October as well, I would expect the Fed to come out and do something, as you say, something bizarre. I mean, what would that be? I have no idea.
Well, it's interesting. In spite of it all, and remember about a year ago, Garrett, we predicted we suggested that the Fed should start cutting rates in the second quarter, and they're about a quarter behind. But if they do enough, if they get on the case quick enough and really drop down, they do a half point maybe, and then another quarter or something like that, another quarter between now and the end of the year, they could be just in time. They could, because usually when the Fed starts cutting rates, about 9 months later the market responds and the economy starts to respond. So they might just have come in enough time to save the day for the election. It's interesting because you've come on a few times at critical points, and your work, and one of the times quite a long time ago when we were talking about your historical record of calling these, and how people get, they ride through the highs and the lows, and they never see the next downturn coming, and then they get caught and ended up, and we really could be at one of those points. I was thinking about that from your comments the last time you were on, because it looked pretty good there. It looked like it almost could break up to the upside, and the opposite happened. And this has definitely caught people out, because they're already down a few thousand points on the Dow very quickly, right? And it's and unfortunately, today's action is what I call a double daily reversal, which is very bad. and potentially another weekly downer. We've kind of given everything back here, and taking out that spike. If we really do have, remember it's Wednesday today, we're down like 600-700, and it's only Wednesday. We got Thursday and Friday. If we don't rally here in the next couple of days, we could be setting up for another 87 type event.
Yeah, it's funny. I was mentioning to Dwayne that this early this morning we were down 400 points. Yesterday morning we were up 400 points. The morning before that we were down 400 points. So, with all this wild action of moving, 1,200 points or in intraday, frankly, in the last 3 days, you're closer to 1,700-1,800 points actually, as far as the swings. And I thought, with all that happening, not counting where we are today, going back 3 days, we've gone nowhere. I mean, today
but
that
the
changed.
Volatility is often a symptom of the top two, Garrett.
Yeah, that's my guy there is in the chart. My little shaken man there is that's I'm trying to exhibit an earthquake there. Guys in California shouldn't talk about earthquakes, should they?
Probably.
I should probably keep
Especially
my mouth.
especially on a full moon.
Exactly. I could. Anyway, that's right. We've got a full moon tomorrow, don't we?
Yeah.
And those are, it's funny how often it depends. I mean, for me, I did a study. Actually, Ian McAvity did a study on the full moon, and I knew Ian pretty well.
I've met him a few times too.
Yeah, he wrote a newsletter called Deliberations, and he started the gold fund of Canadian Gold Fund that Sprott now owns. But he was a good guy. Ian passed away, really a good guy. But he did good studies on, and then we talked at length about it, about the lunar, the full moon.
His son is doing it now, I think, right?
What's that?
I think his son has taken it over, whatever he was doing before.
I don't. That's interesting. I don't know. Now, apparently they did sell the fund, though.
Yeah, right. But I think it's the newsletter. I think the son is doing the newsletter. So,
really, I'll have to check that out. I never met his son, but I'd like to call him up and introduce myself, because back in the day when I used to be on the speaking circuit, back when the speaking circuit was a good one, it changed. Everything's so cyclical. But back in the day, they used to find people that they thought would have something worthy to say for whatever reason, whether they were money managers or economists or whatever, and pay them. And now the difference is, rather than do that, now they have the speaker pay. So you get just what you're getting now and everything else. We talk about how things have dwindled down from evening talk show hosts, from the quality of a Johnny Carson, to all the people we have on now, and the same thing with politics, the same thing with educational system and so forth. And it works the same for the most part with speakers at these conferences, because now somebody who maybe didn't have anything too important to say can just buy his way in now. If he puts up enough money, he can get up there and be one of the key speakers. Whereas in the past, there's no way in the world he would have been able to get in there to speak.
So it's such a true story. And the prices they fetch to be an expert at these different conferences and things, it's a huge business. Huge.
Well, too, Dwayne, at this stage of a bull market, or at least a few weeks ago, everybody's an expert. The guy, the smartest guy on the block is the new kid that just got his broker's license, who's 24 years old and doesn't know a debit from a credit. But boy, he can blow out the hot stocks like nobody's business.
Something that should
that's
frighten everyone is the fact that most money managers on Wall Street today have never traded a bear market.
No, that's just incredible. I mean, I mean, when you think about that, if you want the ingredients for a real nasty situation, there it is.
Well, speaking of which, today is a kind of a scary day because it reminds me of the beginning of 2007. You know how the relentless selling started, and it never stopped. It just kept going for a couple of years.
Yeah, this is spooky because we're getting right back, pushing down to. I mean, we're not quite there yet, but there's a trend line from the low on August 5th through the low on the beginning of August 7th, I believe, and we went down and broke that just momentarily. We did what they used to call a turtle soup move, where if it's a tops line, you peak above it and then you reverse on it, or on in this case it's a bottoms line, you peak below it and then the market reverses. But now we're coming back down to test it again, so it's not. It doesn't. This is what's scary, because when you break through this and you close under it a few times, then you've got a little bit more to go on the downside.
Right. So, also, there's a little bit of a shades of 2000, March 2000, which was when the Nasdaq peaked. That was my famous sell signal on March 24th, 2000, at 2:00 in the afternoon.
Yeah,
that was the last time. That was the last time the Nasdaq was over 5,000. And the interesting thing is that I got to jump in a minute, but I'm seeing this, the break, a rally, and we're making a secondary high, and now we're breaking down off that secondary high on all kinds of stocks and indices, and that is a really dangerous formula. In other words, the best case scenario is we probably have a three-way pullback. So we're either going to go down for a month or two and then maybe find a bottom and go back up, or it's something much, much worse than that. So
yeah, it's I mean, this is a scary thing. I'm hoping and again, that pattern, we go, you go down, or it's on a shorter, on a 30-minute chart, you see the same pattern re-emerging, and then when that starts to translate into the daily charts, it gets a little scary. Yeah, this is going to be. I'm just going to check for a moment and see on the weekly. Remember, I think we were talking about the weekly divergent sell signal that I got back actually a couple weeks before the top, and then it reversed it and took it away, and then it gave it right back the week after that. So we're still in the midst of and you haven't had weekly divergent sell signal for a while. So it'll be interesting to see. We're down. This is going to be, we're down close to the lower Bollinger Bands, and also I keep a 40 and a 50 week moving average, and both of those are together right now at about, probably 2,800 or so. So hopefully you can find some support there, but boy, if you get through that, it's scary. And on the daily, we're down at a lower Bollinger Band. On the VIX, the VIX, of course, has got a way to go to be set up for a buy signal. But interestingly, the weekly VIX is well through the line. And if that comes back and closes underneath the line, then you got a weekly buy signal. And the last weekly buy signal you had was in December at that bottom. So, I mean, these are meaningful signals. So we've got a potential for this thing to turn here and actually maybe have a pretty good rally. But boy, do you want to count on that? See, I'm in the back of my mind, I've got my date at the end of the month that I'm looking at, and I probably shouldn't be, but should that happen, it could give you that kind of a thing where the market goes back, and then you're going to get the news guys to say, well, boy, you see, that was a that was that buying opportunity that we're all looking for, and everybody got scared, and it's so foolish because everything's so good, and you can just see the guys on TV talking about, you know, how you should have been buying the dip like they were, and then all of a sudden you get the turn, and you move past this point in a New York minute. So anyway, it'll be fun to see what happens when we tune in again. I've got to take off, but it's so nice to speak with you two gentlemen as always.
Thank you, Garrett. I'm back on. Yeah, well, I'm sorry I missed the earlier part of the show with you. But,
well, I'm glad you both made it.
Anyway.
Garrett, come back next Wednesday. Sooner, sooner if the spirit moves you.
Yeah, I look forward to it.
All right, my friend.
So, super. Well, listen, have a great week. And all
you
the best.
too. Thanks very much, Dwayne. Nice to speak with you, John.
John, thanks for popping back on.
Yeah, thank you. Listen, have a great afternoon. Much obliged.
Okay,
Bye-bye.
we'll do the same. We're heading down to the Lowe's here. All right.
Okay.
Okie doke. All right, guys. The hour's late. How late is it? It's pretty late. Now, it's almost a 3-hour show today. Well, you never know what's going to happen on a Wednesday. Tuesday, optimistic day, but Wednesday, anything can happen. All right. Lowest weekly trading zone on deck. S&P 500, 2832. The lowest zone for the week on the S&P. The Dow, we're just a couple ticks literally from the lowest weekly zone at 25,445. On the Russell, lowest zone 1461. No, sorry, that's an old zone there. Let me just tell you the lowest weekly zone. 1455/56. And on the NQ, what are we looking at? Lowest zone 72.75. So still a ways to drop for the NQ. Crude, lowest weekly zone there 47.50. So we're well off that low. Gold, lowest weekly zone is 1472, 1473, no worries there. The highest weekly zone for gold is 1549/50, so plenty of upside. And the upside on crude, highest weekly zone for crude is 5910. This is going to be one good week for the record books. Okay. All right. Good word for the day. And I got to go. If you need me this afternoon, reach out in Telegram. I'll be there. Yesterday we talked about what we would be willing to do for 10 million bucks. Yeah. We're going to talk about something different today. Let's talk about problem solving. We've all got problems of one degree or another in different areas. Problems nonetheless. Now, a problem is a problem based only upon your perception. If you perceive it as a problem, then it's a problem. If you perceive it as an opportunity to learn, or grow, or mature, you can transmute any problem into a learning experience. I'm not saying it's easy to do. I'm not even saying it can be simple. But you first have to recognize that there is a problem, and some problems can't be denied. Other problems are buried in denial. But once we face the problem, once we admit that there is a problem, what's the next step? Now, Numbers 2:14 says, "Then they journeyed from Mount Hor by the way of the Red Sea to go around the land of Edom, and the soul of the people became very discouraged on the way." I think that speaks to the American spirit today. To reach the promised land, the Israelites had to go around the land of Edom. This made their journey much longer, and the people became very discouraged on the way. Here's the lesson. The best way to escape a problem is to solve it. Between you and your promised land, you'll face issues that have to be resolved. Recognizing obstacles for what they are. And what they are is a temporary test of your resolve, your ability, and your faith in God. Won't do you much good if you don't know how to handle them. And remember, faith is not what you believe, it's what you do with what you believe. The original Greek for faith is pistos, an action verb. So first, recognize that you will always have problems. That's life. It's that up and down roller coaster, the hills and the valleys. In a valley, don't worry, soon you'll be on a hilltop. On a hilltop, don't get too full of yourself, because soon you'll be back in the valley. Now, we spend our whole life trying to straighten out the curves until we succeed, and then we flatline. Boo. Not music to my ears. Right? So we keep longing for the day that we wake up and all our ducks are lined up in a row. Do you keep ducks? I don't. That may be my problem. I got to get some ducks. Recognize that you'll always have problems. It's a part of life. It doesn't mean you're wrong or bad or broken or that God has forsaken you. It means you're alive. That's a good thing. A university student sent this email to his mom at the end of the term. Dropped out of university, coming home tomorrow, prepare Dad. The email he got back said, Dad prepared, prepare yourself. Al Davis, who owned the Oakland Raiders American football team, said a great leader doesn't treat problems as special, he treats them as normal. If you're working, expect problems. If you're dealing with family, expect problems. If you're just minding your own doggone business, trying to relax, expect problems. If everything goes according to plan, then be pleasantly surprised. If it doesn't, and you've planned accordingly, you won't get so frustrated. A problem not anticipated is a problem. A problem anticipated is an opportunity. Paul said in Ephesians 3:20 and 21, to him who is able to do exceedingly abundantly above all that we ask or think, according to the power that works in us, to him be glory forever. The problem you're facing today, in business, in family, with the guy you see in the mirror every morning, or the lady. If that problem that you're facing, if you can just back up and get a different view, walk around the problem a time or two. Look at it from all sides and all angles, not just the angle where it's bearing down and pressing down on you. It's a thing, it's not you. It's a thing, observe it. And remember, whatever that problem is, whatever you're facing today, it's just an opportunity for God to do for you or through you what you can't do by yourself. Don't be ashamed to ask the big guy for help. He loves it when we ask for help. He loves it even more when we take his advice. By faith. Remember, faith is not what you believe. It's what you do with what you believe. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.